Long-term disability insurance is an umbrella, a parachute that protects people from not being able to work. It's usually associated with your job. You might pay it, your employer might pay it, but a large percentage of Canadian employees have long-term disability insurance to some extent. Often you can tell if you have long-term disability insurance by looking at your paycheck. Your paycheck would have deductions or show a contribution from your employer for long-term disability. If you don't know, you can certainly ask your employer or your past employer if you have long-term disability insurance, if you think you might be eligible to claim it. Lawyers are often part of the process because unfortunately insurance companies often don't pay out claims, and certainly don't often pay out claims for the extent of the length that the employee, the person who is receiving the insurance, would find would assist them. Insurance companies have an unfortunate tendency to cut people off of claims, either by them saying that they're not complying with the terms, or after a number of years. Well, so a lot of people go off on disability, and then they sometimes have short-term disability plan. Sometimes that's government provided, sometimes that's with their company or with the insurance provider. And then they apply for long-term disability insurance. Now, at some point during this process, or within a couple of years of being put on long-term disability, the majority of people are cut off by their insurance companies and no longer provided any income support on a monthly basis. That's where it's important to challenge your insurance company and be able to fight to get the long-term disability that you need, whether or not it's a denial at the beginning or whether or not it's a denial later. An extremely high percentage of claims are eventually cut off. Insurance companies have issues in terms of ongoing liability. So insurance companies tend to cut off benefits so they can pay amounts as a lump sum. Generally, what tends to happen is that insurance companies will cut off long-term disability insurance. Then, eventually what you should do is hire a disability lawyer to sue for you and be able to negotiate a lump sum package to be able to move forward. The insurance company is actually more interested in paying lump sum packages, just that allows them to clear off the potential liability from their books. The insurance companies have internal appeal systems, but those internal appeal systems are often voluntary, and so there's often no use in continuing with those appeals, when instead you can merely hire a lawyer and be able to start the process to be able to start an adjudication or a lawsuit relating to the contract itself, that is the long-term disability insurance contract, as opposed to going through appeals. Appeals are extremely unlikely to be successful and generally are only set up in order to discourage participants so that way they don't get the payout or the rights that they have. The best method is to bypass the appeals process and to have go to a disability and employment lawyer and to be able to start up an official claim in order to get paid out what you're owed. Most people are denied disability benefits in one of two groupings, either at the beginning, so they make an application and the disability benefit provider doesn't ever provide them with benefits. So they say that they don't meet the criteria, or they don't meet the cutoff for benefits. The other is, after 2 years of being on long-term disability benefits, almost all long-term disability plan providers have something called a change in definition, and that means that instead of the test being, are you permanently disabled from performing your own occupation, the test is, are you permanently disabled from performing any occupation? Insurance providers generally see this as meaning that as very few people, if any, meeting the criteria of any occupation. They say you can work somewhere doing something. However, the courts are much more lenient in terms of who counts as being permanently disabled. They're much more likely to find that someone's permanently disabled, and therefore starting up a claim and being able to move things forward and negotiating out is the rational option. If you've ever been cut off of long-term disability insurance, you should be starting up a claim to be able to adjudicate that and be able to get a fair settlement or potentially judgment in your favor. So you have 2 years from when you're cut off from your insurance disability benefits to be able to start up a claim, start up a lawsuit relating to that. Even if you have numerous appeals in the meantime, that doesn't affect that deadline. So it is important to be able to start up as soon as you can. Now, as well, the claims get worse over time, not better. So it's always better to see a lawyer and to move forward with appeal to the court as soon as possible.